welcome. My name's Chris Cann with Harbour Insight, and with me I have Hayden Locke, who's Chief Executive of Marimaca. Marimaca is focused on its namesake project in Chile, and this is part of a series of interviews we're doing with Hayden to get the latest on what Marimaca's up to and where it's heading in the future. Hayden, welcome.
Thanks.
So for a start, we'd like to talk about the copper market. Obviously a huge amount of chat at the moment in respect to tariffs. What are you reading? What are you hearing? And I know you can't control those policies, but if there were to be an increase in tariffs, particularly on moving to copper, what do you see the fallout?
Yeah, it's been a very interesting time, and I think a lot of money being made on the Trump trade. The answer is I'm not quite sure how it all plays out in the long term, but at the moment, obviously seeing quite a lot of strength in the copper price as a result of people positioning for these tariffs. My personal view, having read a lot of research, is this is probably a short-term tightness caused by a movement of physical copper into the US to position for that potential arbitrage that comes from the tariffs. I read last month there was a record high import of physical copper into the US market, I think about 150,000 tonnes. But at some point, once the dust settles, that trade unwinds. I think more importantly for me about the copper market is, despite the fact that there hasn't been synchronised economic growth, global economic growth for quite a while, and despite the fact that China hasn't been performing, and despite all of this uncertainty, copper has held up remarkably well, which says to me that that underlying structural demand change, which is driven, in my view, by infrastructure spend, is very much underway and has really changed the shape of the copper market for what I see to be the medium term, so certainly the next 5 to 10 years.
I want to talk more about that underlying fundamental supply-demand scenario. But on the tariff situation, you talk about that trade in play at the moment, the Trump trade, as they're calling it. It feels like it could go one or two ways. Which way do you see it falling? Which way will the chips lie in your view in terms of whether we go further down this policy road or whether things actually start to ease back? What could it look like?
Yeah, it's an interesting one because it's a classic Donald Trump negotiating tactic to come with a very big stick and then at the last moment, almost brinkmanship, back off from the very aggressive tariffs. And I think it'll be dependent on how the groups that he's putting tariffs on behave and whether they come to the table and negotiate. I personally do see tariffs probably coming into effect and therefore having an impact on the cost of copper into the US market, which will in the short term mean that there's some of that supply tightness in the rest of the market. But I think over the longer term, the medium to long term, there'll be some backing off. I mean, we saw some news overnight that Donald Trump's already talking about. There are lots of groups that he will give tariff breaks to if they behave. So, I'm sure it's going to be a movable feast. It's going to create volatility. But again, I go back to, volatility from a fairly strong position already. It's not a bad position to be in for the copper market.
We look at, say, immediate fundamental demand and supply scenarios, and then obviously that energy transition story, which is a more longer term thematic. When we're looking at just today, China holding up the property market, health in the US economy consistently and persistently, where do you see immediate term developments for that underlying supply demand balance that will affect pricing that will be in the next 6, 12, 18 months?
Yeah, well, from my perspective, copper is still driven by the reasons that it's called Dr. Copper, that it's mostly driven by economic growth and people consuming more of these electrical goods and consumer goods and housing finishes and all those sorts of things. That is still the fundamental driver for the overarching copper market, which is why I say global synchronized economic growth and improvement in the global economy is going to be, I think, the key driver of the next leg up in copper. But certainly what we're seeing, particularly in China and to a lesser extent the US, but not yet in all of the other developed economies, is a heavy investment in the electrical infrastructure. And that's not just driven by EVs and things like that, it's driven by just the amount of additional power demand that is going to be taken over the grids in the next 20, 30, 50 years, driven by things like data centers, which have an enormous power draw from the network. And so I think the forward-looking economies, China as an example, are investing heavily in the infrastructure to allow additional electricity to go over the network. The US is doing it to a certain extent, but it hasn't started here and it hasn't started in Europe. So I think there's quite a bit more to come. And that's the thing that I'm looking for to really keep a solid base under the copper price. When we get global synchronized economic growth, which will happen, it always does, the pendulum swings, then we will see a serious leg up in copper because the supply response cannot be quick enough to respond to that.
How pronounced do you see that lag being? Essentially it sounds like you're saying the East, or China in particular, able to be more strategic with its investments. The West doesn't want to invest that money in infrastructure, largely because they have to pass that onto the consumer, which is politically unpopular. At what point is there a tipping point where they can't delay any further and they've got to make this investment, and we do get that synchronisation? Is that a 2-year story or a 10-year story?
That's the great unanswered question. I think it's a shorter time frame than a 10-year story, but probably longer than 2 years. So that's a very vague answer. I think we're coming to a reckoning point where the infrastructure, the amount of demand of electricity going over our networks, is going to come to a point where we'll start to see power outages because there's just not enough capacity. As we increase the number of data centres, a lot of talk about AI and the amount of power demand that's coming from that. That'll be an additional add-on. So I think the reckoning is coming for the economies that haven't invested, and we'll see those economies starting to do it. Now that might align with China reaching the end of its investment cycle. So okay, we see a flatlining of the structural demand, but I think the structural demand story is going to be very strong for at least the next 5 to 10 years.
And when we look at, you mentioned AI, I think the last time we looked at the research out there, it was adding something like 10% to annual demand, projected for maybe out to 10 years from just AI on its own. That upswing though is coming at the same time as we're seeing a lot of stepping back in terms of climate aspirations. Is there a possibility that over that medium-term time frame it's going to net out, that the increases that we see from electrification and the need for more processing capacity through AI or for AI is going to net out against a reduction in ambition on climate front?
I personally don't think so, because if you just remove the climate story completely and think about the change in the economy that's occurring, nobody we know doesn't walk around with a smartphone with most of their data now stored in the cloud, which is in a data centre, which requires an enormous power demand. Data centres being built at an incredible rate, all of which demand additional electricity. There is a fundamental shift in the structure of the economy towards more electrical demand, which is what has happened throughout history as you get an increase in living standards and an increase in GDP. I personally don't see it changing at all, regardless of what the climate aspirations are and how that's positioned. Maybe EVs become a lesser portion of it, but actually in the grand scheme of demand, EVs are a relatively small portion of copper demand. The big one for me is the infrastructure demand and then global growth.
And just before we wind up, looking at the supply side, what do you see in the research that you're reading at the moment? Obviously, Marimaca is a new project that will come online at some point in the next couple of years, I expect, or at least building towards that. There doesn't seem to be, from what we can see, a lot of other greenfields options that are coming into the market that are going to feed this demand. Is that your view at the moment, or can you see some optimism out there in terms of exploration success that's happening at the moment?
Yeah, there are some great exploration stories that are coming through, but they naturally have a very long gestation period. I mean, I'm sure you've seen the analysis of the typical life cycle from discovery to production of a project is approaching 20 years. So even if you make a new discovery today, it's not going to be a mine in the short term. There are a lot of development stage projects in the pipeline. My view is, in order for CEOs who still have a memory of what happened in the last cycle and who got wrapped over the knuckles for poor capital allocation in the last cycle, they're hesitant to greenlight these mega projects, frankly. If you look at the suite of copper development projects, the vast majority are multi-billion-dollar builds over many years. So it takes a lot of gumption from a CEO to greenlight that until they have a really strong view on the copper price, and most of them need a slightly higher copper price in order to hit the hurdle rates. I think and we're kind of in the middle of it as one of a handful of projects that could be a mine in the next, let's call it 3 to 5 years. And the feedback we're getting from our strategic partners is we've looked at a lot, and there's not that many things for us to invest in that are in the right time frame that can become a mine. And I think that's evidenced by the fact that Mitsubishi Corp has made an investment in little old Marimaca. This is the preeminent LATAM copper investor. A lot of people asking, why did they make an investment in you? And it's because there's not very many things that are going to be mines in the short to medium term, which again really underpins why I'm so bullish in that next 5 to 10 year period for the copper market and for our positioning within the copper market.
Hayden, that's all we've got time for. Thanks for speaking with us.
Thanks.